bleak outlook. The UK Chancellor Jeremy Hunt lays out £55 billion of tax hikes and spending cuts as Britons face a record drop in living standards. Risk sentiment ebbs. Asia stocks trim gains as U.S. futures turn lower after James Bullard raises his view on how high the Fed needs to hike rates. Plus, the ultimatum backfires. Elon Musk's demand for hardcore loyalty prompts an exodus at Twitter and is said to put day-to-day operations at risk. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, earlier this week, Elon Musk issued this ultimatum to Twitter employees. He said either commit to the company's new hardcore work environment or leave. Well, the deadline has now passed, and sources tell Bloomberg that so many more workers have chosen to go than he expected, and that's leading to major complications. Well, joining us now is Alex Webb from Bloomberg. Quick take. Alex, so what exactly is he dealing with? First of all, what are we talking about hardcore? Like people left because they didn't like his antics or because they were afraid of working too hard?
Well, we don't know necessarily their motivations. We know what he was saying he expected from people, namely, yes, incredibly long hours. The sort of adjacent maybe to this this 996 philosophy you get in Asia, where you're expected to work incredibly long days and 6 days a week. There have been far more, Bloomberg's reporting, far more departures than were expected. The risk that poses is not necessarily they don't have the headcount, because there are lots of people floating around Silicon Valley right now who have lost their jobs, so maybe you can recruit some of those. But it's people they don't necessarily have people who know their systems, right? That actually they know where things are buried, they know how to fix problems. So
Alex, talk to us a little bit about the workforce of Twitter, because we all know it. I mean, it's pretty self-sufficient, one would think, because people just go on out and write. But this is what is safeguarding, it's engineers, it's people, I guess, arbitrating in disputes.
Look, there are lots of different, obviously, with any company, lots of different departments. One that a lot of people are concerned about, is content moderation. That if you complain about something or you notice content that is not appropriate, or frankly that there is just proactive moderation of content, there aren't going to be enough people to do that. That's the first thing. Secondly, Elon is trying to iterate on the product itself, improve the product. You therefore need the engineers to do that, to actually come up with the new systems. And thirdly, then you just need the administration.
So, Alex, how significant is this problem? Could regulators step in? Would Elon Musk suspend Twitter for a couple of days? Like, what's the way forward?
Well, we certainly know the regulators are already looking at the deal for national security reasons, partly to do with some of the comments that Elon Musk made about Russia and Ukraine. I suppose having started that process, they can also then look at other pieces of it. Look, I don't really know what Elon's going to do. I don't think Elon knows what Elon's going to do. He didn't anticipate, certainly the reporting suggests, he didn't anticipate the scale of the departures that we've seen. The one thing that's crucially different from Twitter compared to the other companies that he runs is that he basically, more or less, founded those companies. Tesla, he didn't quite found, but he was there very early when there weren't many employees. That means he forged the corporate culture at those companies. He's coming into now this place, which has its own corporate culture, trying to impose a new one upon it, and clearly that electric shock is creating a little bit of a problem.
So what do we know about sponsors? Are they leaving the platform? Are users like you and I leaving the platform?
So brands are very concerned about this. I was actually speaking to Martin Sorrell last week, the former CEO of WPP. He was saying, and I was asking about the World Cup, and he said, given the controversy surrounding it, he said that brands are less concerned about the World Cup than they are about Twitter, that they are pulling back some of their spend on Twitter to wait and see what happens. That doesn't mean they're going to be gone forever, but certainly for now they're taking a hit. And that's a problem for Elon Musk, because he has to find $1.2 billion to service his debt obligations every year. At the moment, Twitter's forecast to have negative free cash flow. One assumes that if advertisers are disappearing, that negative free cash flow is only going to get worse.
Is there another platform that people are looking into as a new Twitter?
Well, I mean, Twitter, don't forget, is a small company, right? It has 200-something million daily active users. Its revenue is less than BT's profit. It is not a big company in that scale of things. All the brands and the users have already been fleeing not just to Facebook historically, but to TikTok, a little bit to Snapchat. All of these places have become more appealing than Twitter. There is a core user group at Twitter, media types, politicians. They really like it. It's still quite good for them, and they tend to move a little bit more slowly than the early adopters we see in other platforms.
Alex, thank you so much. Alex Webb there from Bloomberg Quick Take, talking us through the travails of Twitter. Now, joining us now is Danny Rimmer. He's partner at Index Ventures, a tech-focused VC firm behind Dropbox, Robinhood, Etsy, Deliveroo, but also Glossier. Danny, thank you so much for joining us. What happens to Twitter?
Nice to see you, Francine. What happens to Twitter? Twitter is a very resilient platform. One of the things that we have to remember is that online folks continually use the platform. So I think it's up in the air what happens to it. I certainly think that Elon hasn't done anything to give comfort and confidence in Twitter, but it's still a very important platform on a global basis. So the question is how relevant it will be. That's a big question. Whether it's going to be around, that's not such a big question.
So, Danny, what you're also on to talk about today is basically the VC funding environment. So we're talking about valuations. There's been a number of layoffs, of course, in the tech space, including at Twitter. When do you expect a stabilization of this space? And what does it mean for VCs wanting to get in there?
We're announcing this new seed fund of ours called Index Origin 2. It's the second one raised after 18 months. So it's a $300 million fund committed to early seed investments. So what I was going to say is that when we look at the world, we're really looking at it from a micro lens. And this is a phenomenal time to start companies. So while larger companies are skimming the fat, are right-sizing, are having to in many cases, do some very important layoffs. Of course, there are some companies that are still growing in this period. But on the seed side, when you're really an entrepreneur trying to start a company, this is an unusually good time.
Why? Because actually, you know, from the outside, and we talk about this all over the place and every day, the currencies are very volatile. It's difficult to find staff. So where do you see the biggest value? Like, why would you do it now when you have a cost of living crisis and inflation going up?
Well, I would say a few things. The first is when you're an entrepreneur, you're not the most rational. You've been placed on this earth to start a company that you think is going to disrupt the space. I mean, you mentioned Etsy, and you mentioned Glossier, and you mentioned Figma, Robinhood. Those entrepreneurs really started companies because they thought the world needed it. And if they were just thinking of a rational time, we'd probably not have an Uber or an Airbnb today or a Skype today. Those companies were started in this type of period. And actually, when it comes to great employees, great partners to start a company, anyone who joins a startup right now means it. They're not there for a quick buck. They're not being mercenary or think that this is the right place to be. They're doing it because they mean it, and they're really excited about the prospects of the vision of the entrepreneurs.
Danny, I've always been told that the difference between a good entrepreneur and a great entrepreneur is the money behind it, so that if it is a good idea and they're focused on execution, they can scale up quite quickly. Is there enough capital to go around right now?
I don't know who is telling you that, but I could not disagree more. Actually, from our perspective, the success of companies have been inversely proportional to the amount that they raise. So the less money they raise in the earlier rounds, the more successful those companies have been. And if we take those companies that we've been talking about, in every single case, they were single-digit financings rather than big financings. I think one of the major problems when you're starting a company is if you have too much money, you're not as creative, you're not as agile, you're not as, you don't have the same hustle mentality. So we really encourage folks to start small. And in fact, with Index Origin 2, the investments are from $1 to $5 million and no more.
Okay, I like this. So if you're an entrepreneur and you're going through a tough time, Danny Rimmer says, guys, you could be the next billionaire. How do you spot pure talent? How do you decide where to invest money in with an entrepreneur? Like, what's left to disrupt?
Well, one of them is, you know, if they're starting a company because they want to be a billionaire, then they probably shouldn't start a company. They have to start it because they really believe that they have something better to provide the world. You know, the founders of Figma, this company that just sold to Adobe for $20 billion. Dylan, when I met him at 19, he didn't want to be a billionaire. He wanted to provide design tools to the world. So that's what I would tell them. You know, make sure that you're in it for the long haul. Make sure you're aware that there are going to be ups and downs, and make sure you surround yourself with folks who know more than you and who are different from you, because you're going to need them and you're going to need to learn from them along the journey.
Danny, what's the most common mistake that entrepreneurs always make that you would advise against?
They come to us and they tell us how they're going to sell their company to a very large company for a huge amount of money. And we cut the meeting short and say, we're probably not the right partner. If you're thinking from day one how you're going to make money, selling the asset or the creativity that you're about to embark on, and you're in a rush, you're probably not going to build anything of value, at least not with us.
Okay, Danny, I like that. Next time we talk about the 30-second elevator pitch that you would like. Danny Rimmer, they're a partner at Index Ventures, joining us today. Coming up, we get the latest from COP27 in Egypt on the final day of the UN Climate Change Conference. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, it's the final day of COP27 and nations are still no closer to reaching a deal. Let's get out to Bloomberg's Jennifer Zavazaja, who's at the summit in Sharm el-Sheikh. Jen, I mean, I left like 10 days ago and it doesn't seem that they did much progress. Where are we on that?
Yeah, Fran, I think that's a fair assessment because on this last day, it still feels like a deal is pretty far off. I mean, we woke up this morning and people were pretty frustrated by the fact that we don't yet have very concrete details about what this final decision is going to look like. And you can feel it in the air here. People are waiting to hear a little bit more. And the reason is because we haven't really heard much about the key issues that have defined this summit, Fran. I know you know, loss and damage, mitigation, adaptation, those are still left to be determined. We heard from the UN Secretary General and also the COP president yesterday saying that parties are still largely divided on a number of these issues. But as you can see there, what we did hear from the European Union, which could potentially be a breakthrough, is this idea of a loss and damage fund. And what we heard from Frans Timmermans is that this is the final offer. This could potentially be something that developing countries will be pleased to hear. We don't yet know, but the details of what this fund will look like is so key to getting this right. And as you know, it's all about the details when it comes to a summit like COP and getting it right and knowing who is and who isn't included, Fran.
So if we don't get a deal, or if we don't get, you know, an overall overarching deal, are there still positive outcomes from COP at this point?
I think, Fran, what a lot of people have said, you know, we were walking around the pavilion, the grounds, and there's a number of exhibitions that countries have put up a bunch of their own solutions, climate tech solutions that they've chosen to exhibit here on the grounds. But also, when we think about something like methane, when we talk about global warming and keeping the Earth under the 1.5 degree Celsius, we did see a number of countries decide to join the global methane pledge, and that is very significant. By the end of 2030, we might see 150 nations join this. And just yesterday, we heard from China not joining that specific deal, but saying that they were going to draft their own pledge, that getting an applause from U.S. climate envoy John Kerry. So there are some positive signs here, but just a few minutes ago, we were hearing a protest that was happening small within the grounds about the lack of still action and definition about what some of these deliverables are going to be for this COP that is supposed to be about Africa and for Africa, and really about implementation and building on what we saw last year in Glasgow.
Yeah. So, Jen, what happens next?
Well, we actually just saw Frans Timmermans running by to go to his next meeting. He had met with the UN Secretary General Antonio Guterres just here. He was going to his next meeting. It's seeming like it's really down to the wire here. They're trying to get something over the finish line, but it's more likely than not that the talks are going to continue into the weekend just because there's so much that they need to hash out. And there's so much hanging on this cover document that is going to detail a lot of these issues that we mentioned. And that, I think, is really going to be telling, because that's when a lot of the people who are still waiting here to hear about a deal, to hear what the outcome of this COP is going to be like, will be able to react and see whether or not we've made any progress whatsoever, or whether things are going to get pushed again to another year, to next year in Dubai, where COP is being held.
Jen, thank you so much. Jen Zabazaja there at COP27, of course, with a great roundup of what's been going in the last 2 weeks, hoping that we still get something as we get into the final mile of the conference. Let's get straight now to the Bloomberg Business Flash. Here's Laura Wright. Hi, Laura.
Hi, Francine. The new CEO of FTX has laid out a list of allegations against the company's former leadership, slamming them for non-existent oversight and misuse of client funds. In a sworn declaration submitted to the bankruptcy court, former Enron liquidator John J. Ray says he's never seen such a complete failure of corporate controls. He also says advisors have located only a fraction of the digital assets they hope to recover. Japan's inflation has hit a 40-year high, with consumer prices excluding fresh food climbing 3.6% in the year to October. Core inflation has now exceeded the central bank's 2% target for 7 straight months. The BOJ continues to maintain stimulus is needed to secure stable price growth. BHP has made a second bid for Oz Minerals as the Australian mining giant looks to expand its copper assets. The offer comes 3 months after Oz rejected BHP's initial bid, which valued the company at $5.6 billion. Alibaba shares have surged in Hong Kong as investors digested second quarter results. Despite a surprise loss, analysts see total revenue largely in line with estimates. Executives are optimistic on China easing pandemic restrictions. They will also expand a buyback program. That's the Bloomberg Business Flash. Francine.
Thank you so much, Laura. Coming up, ready for kickoff. We're live from Qatar for a look ahead to the World Cup. That's coming up next, and this is Bloomberg.
Believe you me, this is the same before every World Cup. Go back to 1934 if you want, and the World Cup was in Italy, and it was used as a vehicle to promote fascism for Mussolini. There were riots on the streets by people in Brazil saying they shouldn't spend all this money on the stadiums, they should spend it on social care. We had Russia, who invaded Crimea just a few years before.
Well, sports broadcaster and former England player there, Gary Lineker, comparing some of Qatar's controversies to previous World Cups. Some will take issue to that. So you can watch the full interview he gave on Emma Barnett Meets on Bloomberg Quick Take. Now, 12 years after being awarded the tournament, Qatar's World Cup is nearly upon us. It's the most expensive World Cup ever, and the world will be watching not just for the action on the field, but for potential unrest around human rights issues. Our Simone Foxman joins us now outside the Al Bayt Stadium. Simone, the event's been plagued by controversies. How has Qatar responded?
Well, it depends on the controversy, right? So one of the controversies has been about worker rights. And Qatar has actually made several important reforms to try and improve at least the baseline standard that workers are living at. For one, they have allowed workers to change jobs more freely. They set the first universal minimum wage in the Gulf. Yes, it's only $274 a month, but that's not something that other countries have. However, well, activists, I should say, would like them to do more, but this is one issue. There are other issues, right? So there is LGBTQ rights. Right now, that is not something that is considered within Islamic values, and so that's being proud and being out is not permitted. Also, rights of free expression. You know, protests aren't normally legal here. We may see that come this weekend or into the next week as these games kick off. There was the potential that the World Cup could be carbon neutral. That's also something that activists have largely discredited. Yet again, you know, we have to see how this goes, because a lot of this we aren't going to know exactly how it's like on the ground until the fans all arrive, which they're doing probably right now.
This is, of course, by far and away the most expensive World Cup in history. Has it been a good investment for Qatar?
It's not just the stadiums like Al Bayt behind me. It's also the massive amounts of development that the country has done to try and accommodate the people that will be here, and also to try and make it a modern city. And really what you see when you drive around, if you were here 10 years ago and you're here now, is a testament to how much they've done. They've built a whole new metro system. They've dramatically expanded an already pretty exceptional airport. They've built a whole new modern port. So by those standards, yes, this has been a success already for Qatar. Will it tolerate a lot of people well? Will logistics be an issue? That remains to be seen. Also, more people know about Qatar. They know where it is on a map now simply because this event is here. Qatar has been at the center of some geopolitical issues with its neighbors over the past couple of years, and it needs that global knowledge of people who know where it is, who see it as a modern city. And frankly, it doesn't matter if the talk is negative, if it's positive. If people know what Qatar is and they can associate this idea of a modern city with it, that will be a success for the Qataris.
Thank you so much. Of course, our Simone Foxman, they're on the ground for us in Qatar. Now, Bloomberg Surveillance early edition continues in the next hour. The focus firmly on the markets as we have more Fed speakers throughout the day. Earlier on, we were also hearing from Francine Lacqua saying that rates will rise more. They may need to be much more restrictive on economic expansion in order to drive down this inflation that's really rocketed more than 5 times. Let's remember the official target. We'll have plenty more throughout the day. This is Bloomberg.
We expect to raise rates further. And withdrawing accommodation may not be enough.
We are all united in our commitment to getting inflation back down to our 2% target. It's an open question of how far we are going to have to go with interest rates to bring that demand down into balance.
To get to this sufficiently restrictive level of policy, we'll need to increase the policy rate further.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kailey Leinz.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong. Our top stories today. Restrictive levels. ECB President Christine Lagarde says interest rates may need to be lifted to levels that restrict economic expansion in order to drive down inflation. Exodus. Elon Musk's ultimatum at Twitter causes more employees to leave than expected, potentially putting operations at risk. And the end of an era. Nancy Pelosi steps down as the top House Democrat, opening the way for a generational change in party leadership. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kailey Leinz in New York. And Kailey, surprised to see perhaps quite how much strength we have for European stocks and risk assets here in the European session, given the focus on tighter monetary policy we've seen from policymakers on both sides of the Atlantic.
Yeah, especially Federal Reserve policymakers who keep beating the drum toward potentially a higher terminal rate. The message is we are not done yet. So that whole pivot narrative continually gets cold water thrown on it. And yet it seems the market has faith each and every time, only to get disappointed. Now, it's interesting, as Anna pointed out, that you're seeing strength in the European session, because actually in the Asian session overnight, the strength faded as we got closer to the close of trading on the day and on the week. The MSCI Asia Pacific Index as a whole up about 2 to 0.3%, but that is significantly lower than the gains we saw earlier in the session, with gains fading for technology stocks as well, including Alibaba, which reported earnings yesterday. It was up as much as 6.7% intraday. Big gain in part due to the buyback program that they announced, but those gains faded into the close, only ending the day higher by a little more than 2%. In foreign exchange, the Chinese yuan, a big outperformer on the day. Part of that may be after a PBOC official said the country should be targeting growth of at least 5% next year, so optimism more about the Chinese economy. The offshore yuan trading at 712.72 to the dollar at the moment. And then on that positive Chinese growth story, you've definitely seen that reflected in iron ore futures, up another 1.7% overnight. Now in the month of November, up 28%, Matt. We're back up to nearly $99 a ton. Remember, we haven't been above 100 since mid-September.
All right, so some gains there. Meanwhile, we've seen some losses in crude as the futures curve signals we might be going back into contango. Real concerns about demand. I'll get to that in a second. First of all, check out S&P futures up about 0.25%, but the last few days we've seen gains in futures only to fade that trade when the market opens. We closed yesterday down again in the cash trade to 39.46, so still a relatively high level, down nonetheless. U.S. 10-year yield coming up a little bit, 380.45 is a level right now, so gaining just about 4 basis points. And we still see some really strong yields across the curve, almost 4.5% on the 2-year, more than 4% still on the 5-year, more than 4% on the 20-year. So that creates real competition with equities in terms of people who are looking for yield. Here's the crude price. Right now, it's up 1/3 at $81.89 a barrel. That's for West Texas Intermediate, but it has come down significantly to more than 1-month lows. Yesterday, we were trading at $81.40, and I think Brent was coming down to about $90 a barrel for the first time since October. So getting back down as we have real concern about demand fading in case of a global recession, and all the hawkish central bank talk from Christine Lagarde to James Bullard really weighing on sentiment for the commodity. And then Bitcoin right now, little change, up about 1/3%, $16,732.81. So Bitcoin remains relatively stable at these levels since the crash of FTX. Anna, what do you see in terms of Europe?
Yeah, more on FTX later, and the revelations from the guy who dealt with the fallout from Enron, of course. His view on FTX, really interesting. We'll get to that conversation later. This is what Europe looks like. Positive, broadly speaking, making some decent gains actually in some of these markets. Energy names not doing too badly. We have a slight move higher in oil prices, but it's broader than that. Energy stocks going higher, and utility names seem to be doing pretty well here in Europe. Let's roll over and show you some of the other themes. I also picked out oil prices, just as Matt did, to show you what's going on there with Brent. 89.86. I picked it because we're now down below $90 a barrel. So even though the direction of travel this morning is slightly higher, to Matt's point, there does seem to be a lot of focus on whether we're heading towards another glut. Some of our colleagues at Bloomberg pointing out the high-frequency data on traffic levels in China and suggesting maybe recovery, despite the headlines, is really far away for the Chinese economy, given the low level of activity we're still seeing there in some cities. Back to the top of my board, we've got the UK 10-year yield in here, 3.27%. And we did see yields go a little bit higher in yesterday's session. A lot of focus on this asset because of the budget, the autumn statement coming through from the UK government. It went a little higher. There's a lot of backloading of some of the pain coming through from the UK government, but at the same time, it was pretty in keeping with what we were seeing in US Treasuries as well, with Bullard's comments pushing yields higher, and today pretty much in keeping again as those yields tick a little higher with what we're seeing other places in Europe. Centrica also responding, continuing to respond to what we heard from the budget yesterday. Yesterday, we saw stocks in this sector. This is energy generation, gas to the home and that kind of thing. This company and others in that space doing well yesterday on the certainty and the clarity that we got around what kind of taxation would be applied, what defines windfall taxes, crucially. And the euro is up by 0.1%. And actually, we saw quite a lot of volatility earlier on in the day around the euro, a drop back and then a push higher. As we listen to what Christine Lagarde, the ECB president, had to say, she's talking about rates going into restrictive territory, perhaps, saying there's more to be done on interest rates and talking about the prospects for recession in the Eurozone, Matt.
All right, we're going to focus in on central bankers because key figures from the worlds of monetary policy and banking are gathered in Frankfurt today for the European Banking Congress. At the event, as you mentioned, ECB President Christine Lagarde said she expects to raise rates further to drive down inflation.
Inflation in the euro area is far too high. It has reached double digits in October for the first time since the start of the monetary union. And with inflation likely to remain high for an extended period, we need to monitor the evolution of inflation expectations very carefully. Additionally, although recent data on GDP growth have surprised on the upside, yes, yet the risk of recession has increased.
Maria Tadeo, our European correspondent, joins us now from Frankfurt. So, Maria, what were the other highlights that we heard from Lagarde's speech?
at a conference that you used to cover.
Yes.
And Matt, it's always interesting to be here, of course, because you have the central bankers and then you have the bankers too that kind of come together. But in that speech, two things that really stood out. One is Christine Lagarde saying, despite the fact that there has been better than expected data coming out of the European economy, don't be fooled. The idea of a recession is still there, and the chances of it actually manifesting have increased. And the other thing, of course, is that she repeated the European Central Bank has a mandate that is to bring back inflation to target and therefore will continue to increase rates. So to me, it's pretty clear that they will continue to hike in a recession, and that is potentially where we'll be in December when they meet for the last time this year. Now, that's for the speech. Of course, the question continues to be, will it be 50 basis points? Will it be 75 basis points? I think from the speech today, it's very difficult to really get a sense of which way it's going to fall because she hedged it quite well. She said, of course, we need to deliver on the mandate, continue to hike, but at the same time, this is data dependent. Now, another final thing, Matt, in about an hour from now, we are going to get data from the European Central Bank on the TLTROs. Remember, this is a cheap funding by the European Central Bank. We'll find out whether or not, I believe in an hour, if banks actually decided to use this window to pay it back. A lot of analysts out there say anything less than 500 billion euros in early repayments today will be a disappointment for the ECB.
All right, Bloomberg's Maria Tadeo in Frankfurt. Thank you so much. Let's get to tech news now. Twitter has closed its offices until Monday after Elon Musk gave staff an ultimatum to either commit to working long hours at high intensity or to leave and get 3 months severance. Sources say many more workers declined to sign Musk's pledge than expected, and potentially that puts Twitter's operations at risk. Alex Webb of Bloomberg Quick Take joins us now for more. So Alex, to be honest, I spent the morning thinking about setting up a professional Instagram account if Twitter's on its way out. Is that realistically what we're looking at? Is Twitter going to die?
I think it's highly unlikely that it dies. It's got a very committed base of users as a hardcore group that continuously posts even despite these problems. The risk is the advertisers, that if the advertisers disappear, the revenue dries up. There are a lot of risks associated with, for instance, cutting the moderation staff. Brands don't want their ads to appear next to content that is problematic. But Elon Musk and his investors have spent $44 billion on this company. They will not want it to go under. He does have access to a whole bunch of other capital if he absolutely needs it by selling down his Tesla stake, for instance. Obviously not what he wants to do if he can help it. So is Twitter going to die? It would seem unlikely, but there is a huge risk to the company being able to continue operating effectively.
It was really interesting to see them have to shut one of their buildings yesterday because in all the uncertainty about who was accepting the severance and who was going to stay, there was a lack of clarity about who really still worked there and therefore who was allowed in, which was quite an interesting development. Here in Europe, it seems that regulators are very keenly watching the level of moderation that is going on over at Twitter. One EU internal market commissioner saying that he will have to increase staffing levels on that.
Yes, we've just seen a whole raft of new legislation introduced at the European level which categorise certain companies based on how many users they have, revenue, all that sort of thing, as gatekeepers. And if you're one of these companies, you have to not only have more it's harder to do deals, but there's another piece of it which says you have to obey certain rules when it comes to content. And so Twitter, when it comes to content, is one of those companies. It therefore has obligations it needs to follow legally at a European level. If it doesn't have enough moderators, it will struggle to do so. That's why I think it was Thierry Breton flagging this morning has made this point.
All right, Alex, thanks very much for joining us. Bloomberg's Alex Webb talking to us about the developments over at Twitter as more and more staff flee. Now let's get to U.S. politics. Nancy Pelosi stepping down as the Democrats' leader in the U.S. House of Representatives after holding that role for almost 20 years.
And with great confidence in our caucus, I will not seek re-election to Democratic leadership in the next Congress. For me, the hours come for a new generation to lead the Democratic caucus that I so deeply respect.
Bloomberg's Anne-Marie Horton joins us now for more. So, Anne-Marie, with the octogenarians starting to pass the torch, who are the young bucks that are taking over?
Yeah, clearly this is going to be a massive shift for the Democratic Party, and it really is a new era of leadership for many years. Actually, they have been pushing for this, but finally yesterday with Speaker Pelosi saying she will step down from the leadership post. She, of course, will still be in the halls of Congress, she says, representing her San Francisco district. All eyes are on Hakeem Jeffries. He is, of course, the representative from New York, and he has even been out during the midterms, out there with other Democrats, making sure people are voting for them to make sure they can try to at least fend off what they successfully did in terms of a red wave. And it does seem like everyone is rallying by him to take on that leadership position. Also, some other names to keep an eye on: Pramila Jayapal from the Progressive Caucus, as well as Catherine Clark from Massachusetts. These are going to be the big names to watch in this fresh generational shift. We should also note, though, for Speaker Pelosi, she did receive praise, even begrudgingly, from Republicans. One Republican from Oklahoma said, listen, you have to have a lot of respect for her. It's like the admiration of someone that you hate on another team, but you still admire them because they're the best player. So big shoes to fill for the Democrats.
Sounds like me with Tom Brady, Anne-Marie. So clearly there's a lot to pay attention to domestically, but geopolitically as well. We had news overnight that North Korea test-fired a suspected intercontinental ballistic missile with an estimated range long enough to reach the American mainland. What has been the response from the U.S.?
Yeah, really all eyes continue to be in the Asia Pacific from the United States. And you have Kamala Harris, the vice president, representing the U.S. at this APEC conference when this happened from North Korea. So she had this impromptu meeting with some of the allies like Japan, South Korea, Australia, and they obviously are condemning what went on with North Korea. And also she says the U.S. has an ironclad commitment to their allies in the Asia Pacific. For Japan, this is obviously another level of concern, because what the Japanese prime minister believes is that this likely landed in Japan's economic exclusion zone, something we haven't seen in the past 8 months. And what Japan is saying is that these provocations from North Korea are just happening at a more aggressive space. On Sunday, President Biden met on a trilateral level with South Korea and with Japan to discuss this. And what we were told before he went into that meeting with Xi Jinping is that he was going to tell Xi, rein in North Korea or expect a bigger military presence right here in the Asia Pacific.
All right, Bloomberg's Anne-Marie Hordern still reporting from Bali. Thank you so much. Now let's get back to the markets and take a look at some stocks moving in pre-market trading here in the U.S. And there's some pretty big moves for some of the retailers. Ross up 16.4% in early hours. Apparently, a lot of people are dressing for less because it posted a beat and race quarter, so getting a nice reward for that stock. And another nice reward for another retailer, and that would be Gap. They also beat expectations. Really shows that they're having more progress managing their inventory, and also they did take a $53 million hit from taking off Yeezy merchandise due to the whole Kanye or Ye West debacle. But nonetheless, that stock is higher by nearly 8% before the bell. And one final mover to the upside, Applied Materials. This is the biggest maker of chip manufacturing equipment. The fact that supply chains are easing up and making things easier on the supply side is helping offset some of the softer demand from the macro environment. So they were able to top expectations better than feared. It is up about 4% before the bell, Anna.
Okay, so those are some of the pre-market movers. Kailey, coming up on the programme, Kokou Agbo-Bloua joins us, head of UK research at Societe Generale. We'll ask him about the UK, also get his global perspective on what's happening in markets, the higher rate environment, the question around where terminal rates head to, and Bitcoin may be weathering the gloom, but the FTX saga continues. We have the latest on Sam Bankman-Fried and the FTX drama. Plus, the world's fastest growing economy bets it all on oil. Read more of today's big take story on Bloomberg.com or on the Bloomberg terminal. This is Bloomberg.
Welcome back to Bloomberg Surveillance Early Edition. I'm Matt Miller here in New York with Kailey Leinz, Anna Edwards with us out of London. We are hearing more and more about restrictive rates from central banks around the world. Yesterday, Jim Bullard laid out a restrictive rate that would be between 5 and 7%. He said using some kind of Taylor-like rule. That's even higher than we heard from Jerome Powell at the last Fed meeting. So that's what's concerning markets. In Europe, you're hearing the same kind of thing from Christine Lagarde. Joining us now is Irina Garcia Perez, Bloomberg debt reporter. So, Irina, how is this affecting markets?
Well, the likely impact is going to be an increase in default rates inevitably as the outlook for companies worsens as it's more expensive basically to service the debt.
Irina, good morning to you. What are we hearing on the opportunities in the corporate debt space at the moment? I spoke to a guest earlier on who was sort of suggesting there might be opportunities in the short term as spreads have been coming down, actually, since we got that potential peak in inflation in the United States. But then when recession starts to really bite next year, things could get tougher.
Yeah, so the tricky part here for investors is to be comfortable with the outlook in terms of there's a lot of volatility. So being comfortable with the outlook of how companies are going to perform and when is a good moment to get in, that's getting very, very complicated.
And as we think about kind of the health of corporate balance sheets, the narrative going into this tightening cycle was we're going to be able to withstand it more so, given how healthy things were. Now that the tightening is still underway, what is it looking like? What default risk are we looking at this cycle?
So it's worsening, but the picture is still way better than what we saw, say, in 2009 or even in 2003. So S&P, for instance, is expecting the default rate in the worst-case scenario to be around 5.5% in September next year, but that's far from the 8-9% that we saw in 2009.
Irene, thank you very much for joining us. Bloomberg's Irene Garcia Perez with a look at the corporate debt market. And for more on the markets, you can check out the Markets Live blog. MLIV Go is the function to use on your Bloomberg terminal. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz with Matt Miller in New York and Anna Edwards in London. Now keeping you up to date with news from around the world, here's the first word. North Korea has fired a suspected intercontinental ballistic missile a day after warning the U.S. over continued military drills with allies in the region. Japanese Prime Minister Fumio Kishida says that missile probably landed inside the country's exclusive economic zone. In an effort to break deadlocked climate talks in Egypt, the European Union has proposed a loss and damage finance facility for the most vulnerable countries. EU climate chief Frans Timmermans put forward the offer in exchange for a pledge to reduce use of oil, gas, and coal. It comes after days of little progress at the COP27 talks in Egypt. The new CEO of FTX has laid out a list of allegations against the company's former leadership, slamming them for non-existent oversight and misuse of client funds. In a sworn declaration, former Enron liquidator John J. Ray says he's never seen such a complete failure of corporate controls. He also says advisors have located only a fraction of the digital assets they hope to recover. And JPMorgan Chase is making sweeping improvements to its employee benefits, including giving 16 weeks of leave for the birth or adoption of a child. The bank will increase sick days for full-time employees to 10 days from 6 and bump bereavement to 20 days. Under a new policy, employees will also be eligible for up to 4 weeks paid time off to care for a seriously ill spouse, domestic partner, child, or parent. The new benefits start on January 1st. And of course, Anna, it's interesting to see these kind of benefits conversations because for so long over the last 2 years, we've been talking about the issue of retention at some of these banks, especially as they ask people to return to the office rather than working from home. Perhaps you have to incentivize them in other ways.
Absolutely, something we increasingly we're seeing guests taking the opportunity to take extended paternity leave, which I think is an interesting development. We'll try and get some stats on that. Let's tell you what's coming up on the programme. We'll talk to Kokou Agbo-Bloua, head of UK research at Societe Generale. That conversation coming up next. This is Bloomberg. This is Bloomberg Surveillance Early Edition. Here's what you need to know. Restrictive levels. ECB President Christine Lagarde says interest rates may need to be lifted to levels that restrict economic expansion in order to drive down inflation. Exodus. Elon Musk's ultimatum at Twitter causes more employees to leave than expected, potentially putting operations at risk. And the end of an era. Nancy Pelosi steps down as the top House Democrat, opening the way for a generational change in party leadership. I'm Anna Edwards in London with Matt Miller and Kailey Leinz in New York. And Matt, European equity markets perhaps surprisingly buoyant today for this Friday, given the level of kind of hawkishness that we've heard from, over at the Fed, Jim Bullard, but also from Christine Lagarde. A lot of talk about restrictive levels.
Yeah, absolutely. Although this is nothing new. I mean, anyone who's been paying attention to Fed speakers and to the situation in the UK and Europe knows that something drastic has to be done, and they continue to pledge they'll do it. Take a look at U.S. futures. We are up on the day after Bullard said restrictive rates need to be between 5 and 7%. Now, I guess that could surprise you, but people were talking about a 6% terminal rate at the last Fed meeting, so it just seems like investors, equity investors at least, have a very short memory and continue to think that a pause or a pivot is coming even as often as Fed speakers tell us it's not. The U.S. 10-year yield rising 3 basis points right now, 379.52. So maybe all of this here is priced in. NYMEX crude right now up about 0.25%, but it had come down yesterday to the lowest level that we've seen in about 6 weeks. Brent as well on concern that these restrictive rates are going to cause a recession and fewer people are going to buy gasoline. It's about the demand side problem, not about the supply side for oil. And then Bitcoin, it's up 0.8%, getting back up towards 17,000, but really it's been hovering with the 16 handle all week and basically since the collapse of FTX. Kailey, what do you see in the pre-market?
Well, there are a lot of earnings winners in early hours trading today, some of them remaining retailers, which of course has been a very mixed bag throughout the week, but it was definitely a positive story for Ross, which posted a beat and raise quarter, boosting its outlook on sales momentum. Of course, it's a discount retailer, so maybe a lot of people are looking to steal some deals in this kind of macro environment. That stock is up 16.4%, and Gap, which also managed to top expectations, is higher by about 8% as it has a better job managing its inventory. Palo Alto Networks, which is a cybersecurity company, also managed to top expectations. Analysts really saying that they are working through the difficult macro environment. It's up about 8.5% as it beat on really all of its metrics. And finally, Applied Materials. This is the biggest chip manufacturer, maker of that equipment. It is up 4%. Yes, it's dealing with the softer macro picture as well, but the fact that supply chains are easing, helping out that company in pre-market trading, Anna.
Kailey, European equity markets then, a lot of your pre-market movers look positive. Well, European stocks looking really positive, perhaps surprisingly so, up by more than 1% this morning on not very clear drivers. We've heard some hawkishness from Jim Bullard, hawkishness from Christine Lagarde, the ECB president there. But still, European stocks move higher. A lot of sectors in positive territory, utilities, energy stocks moving higher. The UK 10-year yield in focus, gilt markets broadly in focus in the aftermath of that autumn statement yesterday, clearly going down much more calmly with markets than did the so-called mini budget, which was entirely the intention of the government, I'm sure. 3.26%, the yield on the 10 years. So we do see that yield ticking up a little, and it did do yesterday, but that was in keeping with what we'd seen in more global trends as well. Centrica is up by 2% this morning. Yesterday, we saw this sector, so this is energy businesses, companies that provide energy to the home and beyond. They were doing actually pretty well yesterday. We got some certainty in that autumn statement from the Chancellor about what defines excess profits and therefore what the windfall tax was going to look like. And in amongst that certainty, we saw this company and others in the sector moving higher. The euro is pretty flat today, but it's been really quite volatile. 103.66 is now where we trade. Been quite volatile as we've listened to Christine Lagarde at the ECB talking about the level of restrictive territory that's needed and the risks of recession, Kailey.
Yeah, Anna, so interesting to see policymakers really across the world talking about rates that need to go even higher. You mentioned Jim Bullard saying that terminal rate of 5 to 7% could be appropriate, and certainly that would mean the market may have more work to do. Let's continue this conversation with Kokou Agbo-Bloua, Global Head of Economics, Quant, and Cross-Asset Research at Societe Generale. So Kokou, clearly you know a lot of things. As we talk about what we've heard from central bankers this week, where the market expectations of how high rates ultimately go are versus what they're saying, are we appropriately priced?
I think the market is expecting a cut in June of next year until sort of the middle of 2024, if you look at U.S. swap markets. And we think that it is not appropriately priced. Our view is that the fight against inflation is not over. And to quote Winston Churchill, who famously said after the defeat of the Nazis at the Battle of El Alamein, in November of 1942, that this is not the end. It's not even the beginning of the end, but possibly the end of the beginning. And in our view, the peak of inflation will look more like an inverted U as opposed to a inverted V. If you take the analogy of what we were discussing in terms of U-shaped, V-shaped recovery in 2020. So it means that there's a couple more hikes, and then we'll see a plateau because you need a lot of more sort of restrictive monetary policy to bring inflation down from the 6% back to the 2 to 3%, and that will need a lot more tightening and demand destruction.
Okay, so an inverted U is what the inflation picture looks like then in your eyes. Kokou, good morning. Nice to see you. But at what level does that U sort of plateau? Yesterday we heard, as Kailey was saying, from Jim Bullard, and he was talking about 5 to 5.25, but there were parts of his presentation that seemed to nod towards the idea that things could go much higher. I mean, 7 even featured on some of the charts he was dealing with. What are your expectations of the terminal rate?
Yeah, and this is an interesting point because we did some calculation. If you take the Taylor rule and you use unemployment or sort of GDP as an input, you would actually get between 5 and 7% for the neutral rate. And therefore, our view is that it should plateau between 5 and 6%, roughly speaking. But it will clearly depend, obviously, on how sticky the inflation market is, core inflation is in terms of rent and wages, etc. But it is also very important to realize that it takes 3 to 5 quarters for an interest rate hike to have an effect on the economy. So by the time we reach H2 of next year, we will have had a cumulative effect of over 500 basis points of tightening, and this is only then that we'll see whether it has been enough or not. And ultimately, our base case scenario is, yes, let's say between 5 and 6%, and then the Fed will pause, and then we'll have to cut as the U.S. economy enters a shallow recession.
How do you expect earnings? Wait, a shallow recession. How do you differentiate between a shallow recession or a deep recession? What makes the difference there in terms of what we're doing now for next year?
Yeah, I mean, the difference will be 2 consecutive quarters of negative GDP growth in the sort of a few tenths of a percent, as opposed to what we all see in the UK, for example, where we expect a negative 1.4% GDP growth in real terms for next year. And I think this is sort of the difference because you also have a lot of automatic stabilizers, cumulative excess savings of close to $2.5 trillion, corporate balance sheets being roughly fairly resilient compared to where they were in 2008, for example. And then government as well, injecting some fiscal stimulus, plus the Green Deal or the energy transition investments that are all offsetting some of that tightening.
Well, Kokou, you mentioned the new GDP forecast of a contraction of 1.4% next year. How much downside risk is there to that and in the years that follow based off the autumn statement that Jeremy Hunt gave yesterday?
Yeah, so I think with regard so it will clearly depend obviously on the mortgage market and the marginal propensity to spend, which will clearly hit the middle income in the UK, as we saw. So I think there essentially could be some downside, but I think that the budget has been fairly balanced with some investment and growth programs as well to avoid a protracted depression, so to speak. But I do think that if you take a step back and you see what's been priced already in terms of the weakness of the sterling and China that could potentially come out of its net zero, zero COVID policy, you could see a sort of stabilization of global growth, and that could potentially help the UK recover in that regard.
Can I take us somewhere slightly different, Kokou? And that is, in the aftermath of the collapse of FTX, some of the revelations coming out about the business itself, maybe around the sector, really fascinating and quite shocking in some cases. How have you been thinking about your expectations for either crypto or for blockchain technologies, crucially, as we move through this period of volatility for the asset class?
Well, I think banks in general have looked at the crypto in terms of its technology, blockchain, and how it could be applied to the sort of value chain in the banking system. I think most banks have sort of, if you look at it from the regulator, have sort of stayed away to some extent, but they've been some work done on CBDC, so central bank digital currencies. But the asset class has clearly sort of expanded in terms of the financial derivative markets. We start to have futures and different derivatives on that. But the high volatility is something that requires more regulation, and I think this is probably going to occur over the next few months after the FTX debacle.
Kokou, thank you so much. Thanks for joining us. Kokou Agbo-Bloua of Societe Generale, thank you very much. Coming up, we hope to dive into some of the detail around FTX. The fallout continues. We'll bring you the latest on Sam Bankman-Fried and the contagion that's followed. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the Principal Room. Coming up later today, an interview with PIMCO co-founder Bill Gross. That's at 8:30 a.m. in New York, 1:30 p.m. in London. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz with Matt Miller in New York and Anna Edwards in London. Now a look at what is coming up today. The Asia-Pacific Economic Cooperation Summit continues. President Xi Jinping and Kamala Harris are among leaders set to attend the event. We'll be getting some U.S. economic data, including existing home sales, plus more Fed speak. Boston Fed President Susan Collins will be speaking at 8:30 a.m. New York time. And then over the weekend, the 2022 World Cup kicks off on Sunday, bringing billions of viewers and millions of fans to the tiny Gulf state of Qatar. And on that note, Qatar and FIFA have promised that the 2022 World Cup will be carbon neutral. As the tournament begins, though, environmentalists are raising alarms, saying the event has been greenwashed.
In 2010, FIFA announced that Qatar would host the 2022 World Cup. In its bid, the country promised to make it a carbon neutral tournament. But as the matches approach, environmentalists are claiming that Qatar has greenwashed the World Cup and that the event will put millions of megatons of carbon dioxide into the atmosphere.
So that claim is mostly a PR play. Essentially, there is no way that a mega event of that size can be carbon neutral.
FIFA can do better and should do better. And my focus would be on encouraging them to do that for the next World Cup.
The UN defines carbon neutrality, or achieving net zero carbon emissions, as balancing a measured amount of carbon released with an equal amount offset.
First step is to measure your emissions, and so that's what FIFA has done for the World Cup. We looked into that calculation, and we think that this is quite significantly underestimated.
So there's two big challenges with any carbon neutrality claim at an event of this size. The first one is travel. And the second part of this is construction.
75% of the carbon footprint of all sports stadia over their entire lifetime is locked in on day one from the materials they're built from. It's not about operating costs, it's about concrete and steel.
Qatar has invested billions of dollars in infrastructure for the tournament, including building 7 new stadiums. Organizers estimate that the World Cup will emit 3.6 megatons of carbon dioxide.
The construction of the stadium is the most problematic element because it's the element that we think was most massively underestimated. From that factor, we think the total footprint would be 5 million tons.
International flights in and out of Doha will account for the majority of emissions. However, organizers argue that this World Cup will be more energy efficient than others, since fans won't have to fly to different venues and can instead just take public transit.
The sticking point is always the flights. Most Olympics and World Cups, it accounts to more than 85% of total emissions.
Balancing carbon emissions with offsets is key to carbon neutrality. So far, Qatar has purchased less than 350,000 carbon offset credits of the 3.6 million needed in their estimation. The Supreme Committee says that it has already secured a minimum of 1.5 million credits from the Global Carbon Council and that further details will be forthcoming. So far, greenwashing issues are not keeping fans from rooting for their teams on the pitch. An estimated 1.7 million people will be in attendance, with over 3 million tickets sold. But with a warmer future ahead, effects on fans will soon be felt.
Sport is the most enormous opportunity to tackle the climate crisis because we can engage football fans and make them fans of the environment through their favorite sport.
Bloomberg, Simone Foxman reporting there. And Simone joins us now from outside the Al Bayt Stadium. Simone, very good to have you with us on the programme. That package there dealing with the green element, there's been some criticism on various fronts ahead of this World Cup. One of them around the green issues, as we heard there, also around construction and the conditions for migrant workers. There has been so much construction. I was in the country 10 years ago, and then a lot of the places where games are going to be hosted didn't even exist. Is this considered a worthy investment? Are Qataris pleased with what they have produced here?
I think they absolutely are. And I think that what they say is that showing that a small country with a population of just 3 million people can actually carry out an event of this scale, build all the construction, all the new roads, all the new metro system that are necessary to kind of keep fans happy and get them from place to place. That alone in itself says to their world partners that they can do stuff and that they can be relied upon to even when the going is tough. And the going has been tough for them. In addition to the development goals that were part of hosting the event here, note that just 5 years ago, Qatar's neighbors, Saudi Arabia, the UAE, and Bahrain, as well as Egypt, cut off abruptly trade, diplomatic, and travel ties, leaving Qatar essentially out on its own. Although they have come back into the fold, it's important for Qatar to have people know what they are, who they are, where they are, in protecting their sovereignty, frankly, going forward.
Well, what about the fans? I mean, this kicks off on Sunday, right? I guess people have spent thousands and thousands of dollars on tickets, not even including airfare, under the assumption that beer would be sold, right? They agreed to sell Anheuser-Busch or allow Anheuser-Busch to sell beer. And now we're hearing that they may reverse that decision. Is that true?
Yeah, just in the last hour or so, we learned that no longer would actual alcoholic beverages, specifically beer, be sold inside the perimeter of the stadium. Now, it was already going to be curtailed. You were only going to be able to buy it outside the stands themselves and in the hospitality suite. And for outside the stands themselves, you were only going to have the windows 3 hours before the start of the match and then 1 hour after the match to be able to purchase Bud Light. But now it looks like there's going to be no beer in the stadium at all, except for those hospitality, those high-end clients that are sitting in the key seats. Yeah, exactly. You know, look, this is not a place where alcohol is completely banned. You're going to be able to go to hotels and restaurants attached to them and still be able to purchase alcohol at a price, mind you. It is very expensive, some $12 for a pint of beer, pretty much at minimum. You know, that said, I think the goalposts have changed this late in the game. Remember back in August, we saw the date of the opening match shift a day earlier. It just kind of makes you wonder how much is still shifting in the organizer's head. We're like 48 hours out from the opening ceremony.
All right, Bloomberg's Simone Foxman reporting from outside a stadium in Qatar. Thank you so very much. And again, the World Cup begins on Sunday. This is Bloomberg.
FTX was very centralized. It was all centered around this one guy. And when you centralize anything, bad things can happen.
That was the chairman of DFJ, Tim Draper, speaking with Bloomberg on the collapse of FTX. Now, the new CEO of FTX has laid out a list of allegations against the company's former leadership, slamming them for non-existent oversight and misuse of client funds. Ana Herrera, Bloomberg senior crypto editor, joins us now for more. And it's pretty damning, this, I guess, testimony in a sense of the new CEO, because he's overlooked horrendous bankruptcies and scandals like Enron.
Exactly, yeah. So he didn't hold back at all. He painted a picture of a company, basically complete chaos, where no one really had any control on anything. They can't really figure out how many employees even worked for FTX. They don't have any control of where the cash is. They're trying to figure out how to manage this bankruptcy. So, you know, it keeps getting crazier the more and more we actually get into it and hear what was going on. You know, they talked about loans from one of the companies to some of the main players as well, some of the executives, including Sam Bankman-Fried. So it's just quite, jaw-dropping.
So Anna, are there any shoes left to drop or dominoes left to fall?
I mean, yes, I guess we will still know. They alluded at some of the things that have come out in media reports, so exactly sort of what happened with customer funds, and also, there is no clear picture of how many liabilities they still have with customers, so that, and where the money went. So we'll still wait to hear about that, and obviously who the bigger creditors are. There's still so much that has to come out.
It's amazing, isn't it, the revelations coming through from this kind of reporting about the way that the business was run, as you say, the things they don't know about employees and where the cash is. The new CEO also suggesting that investors should not obviously rely on audits that have previously been done. I suppose this just raises questions for other businesses in the sector or elsewhere. Raises questions once again about what public information is available and how much you can rely on it.
Yeah, so in crypto generally, there's a lot of talk of transparency, but for exchanges, there isn't that much of information available. And in some cases, even the audits aren't that reliable. They said do not trust the audits here. And that's because there's no separation of powers. And so you might have, the exchange being the custodian, being the trade repository, the central clearing counterparty. So it's all kind of mixed up. And obviously, when you mix up roles, you have conflicts of interest potentially.
And when you don't write anything down except for in your Slack chats, it's pretty difficult to
with
keep
emojis.
Records. Yeah, with emojis. Anna, thanks so much for joining us. Anna Herrera covering crypto for us out of London. Tune in to Bloomberg Crypto every Tuesday at 1 p.m. New York time, 6 p.m. in London. Our weekly show, Kailey and I host it, shows the people, the transactions, the technology, everything around the world of decentralized finance and centralized collapses like that of FTX. That's it for Early Edition. Surveillance is ahead. We'll hear from PIMCO co-founder Bill Gross, among others. This is Bloomberg.